Hello, welcome back. Now we are moving to question 2 of the same paper, December 2021 Advanced Taxation. So question 2 onwards will be majorly computations. So be very keen, have your calculator and we compute together. So question 2A has this. The following information relates to Msanii Sacco Limited for the year ended 31st December 2020. The following information relates to Msanii Sacco Limited for the year ended 31st December 2020. So we have an income statement for the year ended 31st December 2020. So be keen on the individual items. 1, we have interest from members' loans of 16.2 million shillings. 2, interest from treasury bills of 3.2 million shillings. 3, interest from government infrastructure bonds of 5 years of 1.8 million shillings. Next is interest from ABA Bank of 1.5 million, rental income of 3.2 million, dividends from Mazao Sacco of 1 million, and dividends from SOPA Cooperative Limited of 600,000. Total income is 27.5 million shillings. Expenditure. 1, we have office expenses of 5.6 million shillings, general expenses of 1.4 million shillings, credit loss, that is bad debts, of 60,000 shillings, and repairs of rental property of 1.3 million shillings. Total expenses of 8.36 million shillings, giving a net profit of 19.14 million shillings. Additional information. 1, office expenses include 1, salaries to SACCO employees of 1.2 million. 2, salary to the caretaker of rental property of 200,000. And 3, purchase of office computers of 400,000 shillings. Now, let's analyze this together. 1, we are told of salaries to SACCO employees of 1.2. 2 is salary to caretaker of rental property of 200,000. Remember, one of the incomes up there is rental income of 3.2 million shillings. And 3 is purchase of office computers of 400,000 shillings. Now, this is the rule in taxation of SACCOs. By the way, taxation of SACCOs is a subtopic under the topic of advanced aspects of rental taxation of business income, advanced aspects of taxation of business income. So one of the organizations we have to study under that is SACCOs, taxation of SACCOs. Now, the rule is here. Section 15 of ITA is Income Tax Act, is not applicable in taxation of SACCOs. That means when determining the taxable income of a SACCO, no expenses are allowable against such income, except what we call expenses on non-mutual transactions. Now, a mutual transaction in taxation of SACCOs is simply a transaction between a SACCO and its members. Now, one is that mutual income, that is income generated from the members of the SACCO, will not be taxable on the SACCO. But further to that is that Section 15 of ITA. Section 15 of ITA is about allowable expenses. But in taxation of SACCOs, there are no expenses allowable against the income of a SACCO, except what we call expenses on non-mutual transactions. Like in this case, the SACCO has what we call rental income, meaning the SACCO has rental property from which it earns rental income. Now, if the SACCO had incurred any expenses on this, such will be allowable. But any other expenses will not be applicable in taxation of such a SACCO. And therefore, from the list provided in Note 1, that is 1, salaries to SACCO employees, that will not be applicable because of the rule I've talked about. 2 is salary to the caretaker of the rental property. That will be applicable, but under the rental income. So what we shall do is simple. We shall determine what we call taxable rental income, and that is what we shall include as the taxable rental income of the SACCO. Purchase of computers is disallowable because of two reasons. Number one, it is a capital expenditure. Number two, I've said that Section 15 of ITA is not applicable in taxation of SACCOs. Two, general expenses include depreciation of 484,000 shillings and non-performing loans to members of 620,000 shillings which were written off. The same rule applies here, that Section 15 of ITA is not applicable in taxation of SACCOs. 3 is corporate tax rate during the year was 25%. That is the rate of tax for the SACCO was 25%. Please, in exams, don't assume the rate. Be keen. If you're given a particular corporate tax rate, use exactly that. Don't assume in all cases. Required. 1. Adjusted taxable profit or loss for the year ended 31st December 2020, and we are given a hint to start with the reported profit. That means we use the net profit approach and not the gross profit approach. 2 is tax liability for the year ended 31st December 2020. So let's begin and do it together. Remember, we have been told to start with the reported profit, meaning we are using the net profit approach. So what are the steps? Number 1, we start with the reported net profit. Then 2, we add back 3 items if they are there. 1, we add back any disallowable expenses which have been deducted according to the statement provided. Number 2, we add back any taxable incomes which have been omitted as the information provided. And then number 3, we also add back any items which may be understating the reported income or the reported profits. Then we move to the third step, that is we deduct 3 items again. 1, we deduct any non-taxable incomes which may have been taxed according to the statement provided. We also deduct any allowable expenses which may have not been deducted according to the statement provided. And 3, we also deduct any items overstating the reported income. So we simply start with the reported profit, then we identify each of those items one by one so that we arrive at the adjusted taxable income. So we start, we say, that is question 2A. So we have what we call Msanii SACCO Limited. We are working out taxable income computation for the year ended for the year ended 31st December 2020. We can have 2 columns to even our work, and we can mark them in thousands. So we start with the reported profit, which is 19.14 million. So we say here reported profit. $19,140. Then we move to the next step. We say add back. So we add back, number 1, disallowable expenses which have been deducted. Number 1, in note 1, we have salaries to SACCO employees. So we say here salaries to SACCO employees, a total of 1.2 million. 2, we have salary to the caretaker of the rental property. That is allowable, so we don't add it back. 3, we have purchase of office computers at 400,000 shillings. But then total office expenses is 5.6 million shillings. But so far, we have only added back 1.2 million and 400,000. That is 1.6 million. Then the salary to the caretaker of rental property is 200,000. So we do it like this. We have 1.2 million plus 200,000 plus 400,000, a total of 1.8 million shillings. But then the total office expenses is 5.6 million shillings, meaning that 3.8 million shillings has not yet been accounted for. But still, we know that Section 15 of ITA is not applicable in taxation of SACCOs. So we bring that here. So we call it other office expenses of 3.8 million shillings. Note 2, general expenses include depreciation of 484 and non-performing loans of 620,000 shillings. From the income statement, general expenses is a total of 1.4 million shillings. So we add back the entire amount because Section 15 of ITA is not applicable in taxation of SACCOs. So we write here general expenses of 1.4 million shillings. Then we have credit loss, that is bad debts. We add it back. A total of 60,000 shillings. And then repairs of rental property is applicable because it is not a mutual expense. That is about disallowable expenses. The next step is here. We remember we said we add back three items, or three sets of items. Disallowable expenses. Number 2, we add back non-taxable incomes which have been taxed. Now, in taxation of SACCOs, 1, interest received by the SACCO from members is not taxable. So then, if you look at the statement we have interest from members' loans of 16.2 million. That is not taxable. We shall talk about it later on under deductions. Same to interest from treasury bills. So the interest from treasury bills, only 50% is taxable. In other words, I'm saying interest income from non-members, we only tax 50% of the gross amount. Gross amount in this case means before withholding tax is deducted. So from the look at the statement, we do not have any other item to be added back. So what we do is to get the sum of all this. So let's add them together. So we have 1.2 million plus 400,000 plus 3.8 million plus 1.4 million plus 60,000, a total of 60,000 shillings. That is what we add here. 6860. We add to 19,140. I get a total of 26 million shillings. That is the next step. The third step is to do the deductions. So we say less. 1, we deduct any non-taxable incomes which have been taxed. So back to the rule I was talking about, that in taxation of SACCOs, interest from members is not taxable. So then we deduct it at this point. So we talk about interest from members' loans. Interest from members' loans. A total of 16.2 million shillings. 16.2. 2, we have interest from treasury bills. Now, interest from treasury bills is taxable, yes, but we only tax 50% of the gross amount. Gross amount in this case means the amount before withholding tax is deducted. Withholding tax on interest income is 15%. Now here, we are not being told whether this interest from treasury bills has been stated gross or net of withholding tax. So you could assume either way. If you assume it is net of withholding tax, it means the amount given here would be 85%. So for you to get the gross amount, you get 100%. That is 100 over 85 times 3.2 million shillings. Alternatively, you could also assume that it has been stated gross of withholding tax. Gross to mean 100% of the interest income before withholding tax is deducted. So in that case, if we were to assume that, if we were to go that route, then we should only add back 50% of 3.2 million shillings. That means we have to be making our notes and assumptions as we continue. So let's make an assumption on the interest from treasury bills. Same to interest from government infrastructure bonds and interest from ABA Bank. So you can state this assumption that 1, interest from treasury bills, government infrastructure bonds, and ABA Bank are assumed to have been stated gross of withholding tax, meaning we are assuming they have been given at 100%, meaning we do not have to gross them again. So if that is the case, then we only add back 50% of each of the figures given here. So 1, we have interest from treasury bills. So we take 50% of interest from treasury bills. So the total interest from treasury bills is 3.2 million. 50% of that should be 1.6 million shillings. 2, we have interest from government infrastructure bonds. So we say 50% of interest from government infrastructure bonds. The total amount is 1.8 million shillings. 50% of that is 900,000 shillings. Then you have interest from ABA Bank. That is 50% of interest from ABA Bank. Total amount given is 1.5 million. 50% of that should be 750,000 shillings. Rental income. Now, total rental income is 3.2 million shillings. Now, rental income is a non-mutual income, and therefore, the gross amount is taxable. That is, we tax the entire amount as it is. So we do not add it back because we do not deduct because it is a taxable income. Next, we have dividends from Mazao Sacco. Dividends from Mazao Sacco. Now, that reminds you about dividend income, taxation of dividend income. A summary of that, we have 3 types or 3 classes of dividends. 1, exempt, qualifying, and non-qualifying. 1, exempt dividends are those dividends which are not taxed at all. They do not attract any taxes. An example of such is dividend income received from outside Kenya. Number 2, we have the class we call qualifying dividends. Qualifying dividends are those dividends whose withholding tax is final tax, meaning once they have been subjected to withholding tax, they will not be taxed again. Now, qualifying dividends are majorly from 2 sources. 1 is SACCOs and 2 is limited companies. So let's come back here. This is dividend from Mazao Sacco, meaning it is a dividend from a SACCO. And therefore, it is a qualifying dividend to mean withholding tax of 5% is final tax. Now here, the amount is 1 million shillings. And we are not told whether this 1 million shillings is net or gross of withholding tax. So in that case, we could assume either way. 1, we could assume it is net of withholding tax. If it is net of withholding tax, it means the withholding tax deducted is already final tax. So then it means this 1 million shillings given here will not be taxed again. 2, we could assume that it has been stated gross of withholding tax. If it is gross of withholding tax, it would be the 1 million shillings here given here would be taxable. So depending on your assumption, you could go either way. If we were to pick on the first assumption that the dividends from Mazao Sacco is assumed to have been stated net of withholding tax, then it means we would deduct it at this point. So if that is the case, we have to deduct it. So we say I can continue from here for purposes of clarity. So we write here dividends from Mazao Sacco. So it means we are assuming this is net of withholding tax. So you have to write that assumption very clearly. So let me state it clearly. You can say dividends from Mazao Sacco is assumed to have been stated net of withholding tax. So that would mean the amount given here is not taxable again. The last income given there is dividends from SOPA Cooperative Society Limited. Dividends from SOPA Cooperative Limited. That reminds you again about types of dividends. So I had explained two of them: exempt dividends, qualifying, and non-qualifying dividends. Now, non-qualifying dividends are simply those dividends whose withholding tax is not final tax, meaning they are subjected to taxation beyond withholding tax of 5%. Now, these non-qualifying dividends are majorly from primary and secondary cooperative societies. So let's come back here. This is dividends from SOPA Cooperative Limited, meaning this is a non-qualifying dividend, to mean it should be taxed beyond withholding tax. The amount given here is 600,000 shillings, and we are not told whether this 600,000 shillings is net or gross of withholding tax. So depending on your assumption, you could either deduct this or have it taxed. So let's understand the first assumption. If we assume that this 600,000 shillings is gross of withholding tax, it means it would be taxed the way it is. That is 600,000 shillings. 2, if you assume that it is net of withholding tax, it means you would have to get the gross amount. That means we would do 100%, 100 over 95 times 600,000 shillings. Then we tax the amount. So assuming we are going by the first assumption that this 600,000 shillings is gross of withholding tax, then we would tax the 600,000 as it is. So that means we would write the assumption like this. You can say the dividends from SOPA Cooperative Limited is assumed to have been stated gross of withholding tax, meaning the 600,000 is the entire amount earned by the SACCO as dividends. So that means we would tax it. And so we do not deduct it at this point because the amount is taxable as it is. So then we would get the sum of all this because there's nothing else to be deducted. So let's add together keenly. We have 16,200 plus 1,600 plus 900 plus 750 plus 1,000. A total of 24,50,000. We write that here, 20,450,000. We deduct that from 26 million, and I'm getting 5,550,000. So we call this adjusted taxable income. And in that case, we have answered part 1 of question 2A. That was asking adjusted taxable profit or loss for the year ended 31st December 2020. You can call it adjusted profit or adjusted income. Part 2, still on that, is tax liability for the year ended 31st December 2020. So in this case, we use the corporate tax rate given and the adjusted taxable income. So we do it like this. We say tax liability. So we say gross tax liability. Gross tax liability is equals to 25%, that is the corporate tax given, times the adjusted taxable income, which we have found to be 5.55 million shillings. So we do that. 25% of that is 13 million, sorry, let me pick it again. It is 25% of 5,550,000. That is 1,387,500. Now that is gross tax liability. If we had assumed that any of these taxable incomes had been taxed net of withholding tax, we would deduct the withholding taxes already paid at this point. But in this case, we have none of such. So it means we have this as the final tax liability of the SACCO for the year 2020. That is part A of the question. We move to part B of the same question, that is question 2. We follow it keenly, word by word. It says,